Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, November 15th, 2024. Ron Quaranta here with my amazing friends and co-hosts David Brill and Josh Klayman. David, Josh, good to see you both. Our usual disclaimers before we begin. For everyone in the audience, thank you so much for joining us. Obviously, nothing that we're discussing should be considered accounting, legal, investment, tax advice. David, Josh, and I are not endorsing any particular tokens at all. And obviously, everything we're talking about are our own personal opinions, don't necessarily represent the opinions of our firms. Josh, David, as we begin to approach the holiday season, we are all busier than ever. David, Josh, how are you both?
I'm doing great. Feels like the crypto industry got gifts in their respective stockings for whatever holiday you celebrate early this year.
We are definitely, I don't want to say basking in the glow, but certainly the crypto market has responded positively to the election results. And David, Josh, I know there are a couple of races still to be called. Josh, what are your thoughts? We're still talking elections. We had our Monday kind of post-election wrap up, and your phone, I'm sure, as you mentioned, is ringing off the hook.
Yeah, things have been blowing up in every which way, but positively. I should specify positively. I had a birthday yesterday.
Happy birthday.
Yes, happy birthday, Josh.
Thank you. And I feel like this whole, the buoyant energy of our space has been like one long party for the past, I don't know, week or so. So feeling good.
Josh, yeah, it's been super busy, and I have to admit, David, and I'm sure we'll get back to the steakhouse bet, but once we broke 90,000, my wife was saying, is there a chance David buys the steak dinner? I said, we'll see. David, I wanted to start with some of the macro stuff if I could. I know there's been a lot of data that's happening, and Josh, I hope you don't mind, but the macro has been on my mind. Earlier this week, I think it was Wednesday, core CPI came in above 3%. So again, the Fed saying we're making progress on beating inflation. December rate cut, David, probably baked in. I don't see that not happening. The other thing that happened this week, David, and I really want to tie it to crypto prices and kind of the overall macro conversation, was retail sales. So October came in stronger than expected. I think it was 0.4%. They expected 0.3%. Shoppers still be shopping. I would imagine that's going to be a higher number even in December. The thing that made my head explode, David, the revisions for September. It was 0.4% in September, meaning it looks like retail sales are slowing. The revision, 0.8%. They were off by 100%. So again, always worried about the veracity of data. If for no other reason, then it's hard to get accurate data. David, how is this impacting what we're seeing in the markets?
Well, clearly these revisions are troublesome, and we're also data dependent, and we're also data dependent on bad data.
Yeah.
I was joking with someone last night that maybe one of the things that Vivek and Elon can do is work on our data sources and the timing of the data and the quality so that we could have proper data sources to make these calls and predictions on the market. So look, it's unhelpful. And it's really regardless of who's in office. It's unhelpful if we're making really important monetary decisions and our underlying estimates are off considerably.
Yeah. Josh, I know we joke about you not following the macro, but I think you do follow the macro. And I wonder in your day-to-day, when you hear these things, does it change your perception of what's happening in the economy, what's happening in the crypto markets? When you get the Bentley gassed up, is it still more expensive than you think? What's your kind of personal opinion on some of that?
I mean, I think things are still expensive. I just bought this is not showing that I look at the macro at all. This is like the micro of the micro of the micro.
For her birthday, she bought a Bentley, David.
No, but this is truly the micro of the micro. You'll hear in a moment. When I was in the new Penn Station, Moynihan Hall, the train station in New York, I bought a book, a simple paperback, right? Yep. I was expecting, I don't know where I've been, I was expecting it to be maybe like $11.99. It came to $23.99 for a paperback, and I was appalled. And I thought, oh my gosh, this is such a markup by this retailer. But no, it was printed on the book by the publisher that it had to be, I think, $21.99 or something like that. And so, of course, with tax and everything else, I mean, you know, but also just stepping aside for a moment to what you guys were talking about a second ago, Ron, I know you said you're still pretty confident that the December rate cuts baked in. I had
Yep.
seen an article that was relating to this, saying that on CME FedWatch, the odds had gone down from like 83% to like 60 something percent about the likelihood that after the Fed chairman's recent comments about the economy, about whether that rate cut is likely to move forward.
Yeah.
I think it's super interesting. I'll just say one other thing is, we've been talking about, okay, these replacements of different agency heads. We've certainly been seeing some appointments
Yeah.
in the news that have driven and caught fire in the headlines.
Yeah.
But the statement by the Fed chairman that he's not going anywhere, he doesn't have to go anywhere, and he can't be removed. Obviously, other than for cause, I would imagine. What do you think of that?
So I'll weigh in with a couple of things on the interest rate cut. It really is important to think about what the Fed looks at compared to the data that we talk about and industry pundits on Wall Street talk about. And Kenley, Josh, to your point, the day-to-day information people see, like we live in a world of information. Every time someone buys a paperback book or goes to buy a mocha latte at Starbucks and pays $11 for it, or whatever the number is that my wife loves at this point. The data that the government looks at and the data that the Fed looks at are things that we don't experience every day. The everyday person doesn't think about CPI. The Fed looks at things like owner's equivalent rent, and there are economists out there that will tell you that's a made-up number. No one pays something called owner's equivalent rent. David, when we see this, to Josh's point, one of my concerns is the Fed responding A, to the wrong data, or B, to old data? And that's the thing that always concerns me. And I know I sound very cynical about it. Everyone's saying inflation is beaten. When you look at some of the data, inflation in certain areas in the aggregate is over 4% still. And I worry that interest rate cuts, I think the interest rate cut is baked in, Josh, for December, simply based on market expectations. I honestly think that the Fed doesn't respond directly to market expectations, but a lot of economic models that the Fed has will point to them cutting for December and then pausing. Lots of words coming out of my mouth, Josh. I'm sorry. David, tell me I'm wrong. Tell me if you're seeing it differently.
No, I'm just amazed that romance novels are costing so much these days, Josh.
I mean, I would call them beach reads.
Oh no, all joking aside. Look, there's a lot of interesting cross currents at play, and I think one of them is the bond yields are still high and not reflecting these rate cuts.
Right.
And so, as we've talked about before, the stronger the US dollar is, it's not beneficial for crypto. And I think generally speaking, it's not beneficial for our economy in general. So clearly the market is saying one thing and the Fed is trying to direct the market to a different place. And then when you have these data points that are probably supporting the market's view of what rates are versus what the Fed's view, it's challenging. It's really challenging. And, one of the things I think we've all heard, regardless of what the political spectrum you're on, is that, it's the economy, stupid. And, people, I think inflation was either the number one or number two issue for people in this voting cycle. And we do need to find a way to deal with this. Costs are continuing to rise. And obviously, we're not going to have price caps. We're not a Marxist society. But we do need to find a way to reduce costs somehow, or just keep it. It has to grow at a slower pace because we're using it off such a high base.
Yeah.
So, even like 3 or 4% off of this base is very high for a lot of people. So I don't know what the answer is, but it's something we really all have to think about and try and figure out.
David, I think the answer will be in the pause that I am hoping for, expecting sometime early in the new year, because if they're going to be data dependent, they're going to wait for new data, particularly after the holiday season. And David, to your point about the dollar being strong, we're seeing that play out post-election, whatever anyone's political views. And you look at countries like Japan, where the yen is getting pummeled.
Yep.
And when your currency is being beaten up that badly, they're literally looking at doing currency intervention. it negatively impacts that country's economy pretty deeply. David, let's and Josh, let's bring it back to the world of crypto. And the three of us have argued that crypto is a macro conversation. A couple of things, David, I want to start with. Outflows in spot ETFs, I think for both Bitcoin and ETF have increased. There were outflows over the past week. David, I call that a bottom indicator for prices. Tell me I'm wrong.
Well, look, we had such high flows in after the election.
Yeah.
I think people are forgetting that because the election was so contested, and even though we called it here, who we thought would win,
yeah,
a lot of money was on the sidelines. So I think you saw all this excess money on the sidelines in cash go into the market in different places and go into, the Bitcoin and Ether ETFs. So I'm not necessarily concerned. Look, we had a big move. We moved from, 60 or 70 up to 93, and we're sort of, hovering around the 90K level. So, markets, it's just not always going to be up and to the right unless you're MicroStrategy. And, for the rest of the ecosystem, I think it's a little bit of a healthy pause. I do want to talk of some things that I've been seeing that I want to share, but what's your take, Josh? Are you surprised we're pausing here or seeing some outflows, or what catches your attention?
I mean, I not that I'm a great wizard of all crypto prices, but I mean, I think just in general, it's never really been a smooth path all the way up, right? We are always seeing movement. So, I mean, to the extent, Ron, if what you're saying is the case, which I think many agree with you in the market, at least journalists and others, if this is the bottom, I mean, the bottom's gotten pretty high. So that's,
yeah,
I think. And I see we have some comments from Greg Murphy in the chat.
I forgot to look at the chat. M2 flattening, Greg Murphy shout out, which is interesting. Generally, when you're looking at M1, M2, M3 and the flattening of the curves of currency usage, you look at diminished economic activity broadly. Greg, I think I'm interpreting that correctly. There's not many friends that we have out there that quote M2 stats off of the St. Louis Fed. Josh, go ahead. I'm sorry.
Well, for those who are watching, Ron, can you share a little bit about M2?
Oh, God. This is bringing me back to economics days. So I think M1 is cash. M2 is cash demand deposits. I think I'm definitely screwing this up, Josh. M3 is probably add-on savings accounts to that. It's basically the quantity of money in circulation in the country in different methods. And I know Greg, just macro stuff, Greg Murphy, and appreciate it, buddy. Brings me back to the 80s and my macro classes, Josh, but it's generally how money is moving through the economy, the mechanisms by which it's moving, how that is counted, and whether or not it's accelerating or slowing. And those are usually indicators of economic activity broadly. Man, really put me through my paces. Greg Murphy, thanks, buddy. So I want to go back to my original question. If we got outflows on ETFs, David, am I wrong that we've hit a bottom? And if I'm not wrong, what's the bottom?
So this is where it gets complicated. I think there are multiple issues at play. So we've had this big move, about a 30% move in a short period of time. And I think generally speaking, both the market and people and market participants are very bullish about what a Trump administration could mean for crypto, and especially for crypto in the US. That being said, we are also seeing that the dollar is strengthening. And so that's something to consider. And also, there's a lot of leveraged positions that are in profit. So I think the wallets in profit right now are somewhere in the high 90%. Mm-hmm. And usually at some point that has to work itself out. Yeah. So I continue to be very bullish, but I'm kind of watching different levels, like around 87 and 86, to see if we sort of stay in this range, or if we are, if we see the market sort of sell off a little bit and some profit taking take place. But I do have to say, Ron, looking at the charts, I will say this, I'm saying that you still have a chance, but I'm still feeling extremely confident about our little wager.
To the point we've raised many times, David, none of the three of us lose, no matter who wins.
Yes.
Shout out to Adam. Obviously the M stats track the growth of the money supply, which go hand in hand with inflation. I want to move off of the velocity of money conversation. Greg Murphy, thanks for the comment. We'll come back to it. I do want to bring back one more thing, David. You've brought up the election, and obviously there are folks that are very happy or very upset about the election. But that being said, it really comes down to who are in positions, and one of the more important positions in my mind personally, that I don't think has had any nominees in the upcoming administration is Treasury. There are a couple of reasons in my mind why that's important. But Josh, David, do you agree? And I know Jamie Dimon got the post on Truth Social that it won't be him. And I think given how much he makes, he's probably happy about that. But David, Josh, do you agree with that? And do you have any estimates or predictions about who might be Treasury Secretary?
What are your thoughts, Josh?
So I don't have any predictions on that. I think what I've seen so far, what we've seen is it could be anyone. It could be anyone.
Yeah, there's no standard nominees in this administration coming up. Right?
Yeah, I mean, talk about shaking things up. I think there's a lot of there are a lot of possibilities. I want to hear David's thoughts on this, but I also want to talk about a potential crypto czar after that, if that's okay.
So, I think, and again, I don't have any direct knowledge, but, it seems like Howard Lutnick has been not so subtly putting his name out there for the position and advocating for himself. There's another name out there that's just escaping me at this moment that, I think somebody who's deep into finance who's also interested in the role. Look, I think everybody generally has sort of been of the view either they're very pro crypto or if they're not pro crypto, they're supportive, but they're not sort of advocates for it. So I don't think of the Treasury position. Adam Goldberg, right on cue. Scott Bassinet. I've been away on vacation, so I've been enjoying myself. So I have not dialed in on this particular issue, but I do believe there wouldn't be someone in Treasury put in that would be inconsistent with the goals of the administration regarding crypto. Like, I don't see that. But I do want to mention one thing, and I had an interesting text conversation this morning with Doug Landy from White & Case, and Jay Klayman, it looks like, will be the head of SDNY, and it's very interesting because for all of you who don't remember, Jay Clayton was the one on his way out the door who brought the Ripple action, or signed off on the Ripple action. So. It seems like he's moved on his views on crypto, but it is sort of interesting that in some ways the protagonist for some of the enforcement actions is now back in a role, not in the SEC, but with SDNY. And so, Josh, I'm gonna lean to you and see what do you think about all that?
So, I mean, Jay Clayton, from what I've heard, was wildly popular at the SEC when he was at the SEC, like a real man of the people. Right. And I think, we saw his views, I think, evolving while he was at the SEC. Granted, that big swing with Ripple on the last day was quite a big step. But we did see him go from saying, listen, ICO sounds like IPO to, getting on the bandwagon once Director Hinman had said that, in his view, in 2018, right, that offers and sales of ETH weren't offers and sales of a security. So, and we also saw after Jay Clayton left the SEC, I believe this is true. I don't know if it still remains the case today, but I believe he became an advisor to Fireblocks, the crypto custodian. So, I mean, I think it could bode quite well for our space. Certainly the New York AG has been very active.
Yeah.
And
to that point, Josh, what for those who may not know in the audience, and certainly for a dinosaur like me, what would going to SDNY do for the industry? How much influence does being in SDNY does he have vis-a-vis crypto cases, or any cases for that matter?
I mean, so I'm probably not best positioned, not being a litigator, to answer, but what I would imagine, if we think about what Mark Yeda, the SEC commissioner, said on Fox Business relatively recently about, the SEC's war on crypto must end, and basically saying enforcement actions where it's based on a failure to register and there's no allegation of fraud or harm, right? That those types of things need to fall away, or the emphasis should not be on that. I mean, I would imagine that the focus will be hopefully on actual harms, right?
Right. Understood.
And so I think, look, I think it's really important, like Josh just said, that that the SEC and the DOJ, working through the SDNY, pursue frauds, pursue hacks, pursue the elements of the industry that we'd want them to pursue, and do it vigorously. But I think, and I'm hopeful that maybe the SDNY will have some sway over the NYAG, who's kind of brought some actions against crypto parties in New York that I think were not necessary. And I don't mean the ones regarding the earn programs with Gemini and Genesis, but some of the other ones kind of really trying to extend out their jurisdiction into places where it was nominally there, and really leave that work to the SEC and to the DOJ and SDNY. I think that would be helpful. So I think that would certainly be helpful.
Yeah.
And my sense is, again, reading the tea leaves, is that, former President Trump and soon to be President Trump hasn't been a fan of some of the judicial actions that have been brought in New York, and wanted somebody strong based in New York to maybe be a check and balance over some of the things that have been done on a state level.
Yeah. And I would just emphasize, I would just emphasize that just because there is enforcement or suits against crypto players, it doesn't mean anti-crypto. Like, I think what comes to mind is, for example, the SBF hearing, right? I don't think, when I look at that doesn't seem anti-crypto to me, right? That seems anti-fraud. So, and I think getting back to that, where we can have anti-fraud and anti-bad things and not anti an industry.
Yeah. And to the points the three of us have made many, many times, which is, look, fraud is fraud and should be prosecuted. Illicit activity is illicit activity, and industry participants that are quote unquote legitimate, responsible industry participants, Josh, should face the consequences of that. Josh, would it be inappropriate for David and I to nominate you as Crypto Czar? You brought up Crypto Czar, so we're going down that road.
So I think it's really fascinating that post remains open. Now, I will say, like, some folks, like our friend Val at FinHub, she is an amazing, in my view, I think she's done an amazing job across now two different presidential administrations. But in terms of a policy czar, I've heard Ron Hammond's name being batted around, and I think he'd be a pretty good choice. I think
Smart young man.
Yeah. I think one of the sticking points has been, at least what's been reported, is that, can't hold too much crypto, has to be de minimis amount. So I think that some are saying that could limit who could become the next crypto czar. But I think it would be a great gig, but
that definitely disqualifies David and yourself if it's to get a hold minimum amounts of crypto. Josh, David, we started going down this political route, election route. Let's continue the conversation. We've been talking about the SEC. News recently, obviously the Fire Against Gensler crowd kind of really got stoked past the election. And we've had conversations that that's really not how it works. There's anticipation that Chair Gensler will potentially resign. And David, there was a speech that he made, I believe it was yesterday, and some of the wording was read as him saying goodbye while taking credit for, I'm going to paraphrase, the successes of the work they've done in the crypto space. Part of me felt a visceral reaction to some of that, David, which was there were some real failures in the crypto space during SEC's watch. Did you read that, David, and did you have the same perspective?
So first thing I want to say is that I am also supportive of Ron Hammond as a candidate for that
Smart guy.
role. I think he's really been in the trenches on this, and it would be nice to have a fresh face and somebody who's really kind of been living and breathing this the last few years to be in that role. So I would support that. So to answer your question, I did read it, and look, I think everybody should have a chance in these administrations when there's a change in office to sort of resign gracefully. And you know, if I think it would be great if maybe he just resigned between Christmas and New Year's and just that news story passed on. I think the majority of people, when looking at the run at the SEC, you know, probably will see it as, and for crypto, is really an abject failure on many fronts. The lack of creating any regulatory regime and sort of this unbalanced legal approach of claiming their crypto asset securities, and then the judge has to sort of, you know, wrap them on the knuckles and say, well, that, you know, that's not a thing, you've made that up. And then, you know, the debt box incident where, you know, a TRO was obtained inappropriately. And frankly, that almost a half of, I mean, I've read somewhere like between $250 million and $500 million in legal fees and costs that have been, you know, that the industry has suffered to defend actions. You know, it's a shame. And I think we're going to look back at this time and wonder, you know, where could we have been as an industry if we had had 4 years of a productive rulemaking environment instead of a focus on enforcement? So, look, these jobs are hard and they're dimensional, and there are many influences that are put upon chair people and chairman in this role. So I think if he could gracefully resign, you know, between Christmas and New Year's, and, you know, we go in with a new chairman, I think that would be best for the industry.
Josh, weigh in on this if you could, please. Yeah.
So I think, you know, not that I'm, you know, a Gary Gensler biggest fan,
Yep.
by any stretch. I think we do have to remember that right in the middle of his chairmanship, FTX happened.
Yep.
Yeah.
Exactly.
And so, you know, we don't know what might have been. We can imagine what might have been, and that maybe it would have taken the same trajectory, meaning his tenure. But I do recall, like, in the hearings right after the FTX collapse, right, someone, was it Elizabeth Warren? Someone said, you know, the SEC needs to get suited up. And I recall Gensler saying the SEC is suited up. Right. And so I think that it's possible that he may have seen that as, you know, backing for the stance that he already was taking.
Yeah.
But certainly if SBF hadn't, if that blow up hadn't happened, if those crashes hadn't happened, which saw us, I think we went from in the 60s, right, with Bitcoin price down to like 17 or something like that.
Yep.
Lots of people hurting, lots of people having challenges. I think that really, well, we can blame Gensler for a lot of things, or we can point the finger. I think that the bigger finger needs to be pointed. Maybe that came out weird, but it needs to be pointed at,
we know where you're going with it.
FTX and some of the other.
To that point, Josh, to that point, you know, and again, we can talk about who's fans or not fans of Chair Gensler. To repeatedly testify before Congress and say that the Securities and Exchange Commission is the cop on the beat, and not be on the beat when FTX happened, is really concerning about that kind of, what is the focus of the agency? David, I cut you off. Go ahead, buddy.
I'm going to push back on Josh a little bit here. I think that the fundamental moves of not investing and having people in capital and trading and markets or corp fin think about a regulatory regime and really use assets and resources to go after and prosecute different players in the crypto space. I think fundamentally that was a wrong move. And then, yes, and what built upon that move was not having the regulatory sort of infrastructure in place that may have been able to prevent the FTX of the world and some of the other blowups. And then, you know, I think the political backlash, you know, it's been reported that Chair Warren and Gensler were deeply involved with FTX and had a lot of meetings, and needed to do something to sort of deal with the fallout of that, and then maybe that was the reason why we got this rash of enforcement. So I think, look, we don't want people who participate in our space to be hurt. We don't want regular customers to have bad experiences. We also are not going to underwrite people's buying and trading choices. And, we're all adults, and crypto goes up, crypto goes down, but we don't want to see people harmed when centralized entities have challenges. But I think fundamentally, the position of not sort of staffing up the regulatory side and really focusing on enforcement is probably the part that will get focused on the most when we look back at these 4 years.
Yeah.
Yeah. And is it okay if I just respond a little bit?
Yeah, of course.
No, I was totally playing devil's advocate. I was just imagining a different outcome. No, I mean, because I think it's pretty clear that Gary Gensler was very personally, was individually controlling what was happening at the SEC. He was not giving a lot of latitude, as I've heard, to people to move forward in ways that weren't exactly in his agenda. And we've seen that, including, even at a very, personal, professional level, where clients have sought no action letters, right? Didn't get them. Or we've seen, projects go before Congress saying that they tried to go in and register. Exactly. And that, lo and behold, didn't happen. So please no, I am, that was just trying to imagine a different future.
Josh, David, I want to wrap up that topic with one thing. And Josh, let me stick with you for a moment, because I think it's important. The Fire Gensler crowd, some have this vision that Gary Gensler walks away and then the sun rises and then crypto is wonderful and all accepted. And we've seen some commentary in the marketplace that tells us that that may not happen that way. And Josh, specifically, I'm thinking about the multitude of cases that are still in courts. David, you referenced it earlier. It's enforcement, but it's CorpFin, but it's the other divisions in the SEC. We might not see the result the industry thinks we're going to see for some time. Josh, do you agree? And do you have any thoughts about the current state of cases in the crypto space?
For me?
Yeah.
So, I mean, listen, I think I'm not a litigator, as I've repeatedly said. Yep. I think it's hard for the cases to just stop. Right. I do wonder whether we may see now, with respect to the Ripple matter and an appeal about that, whether we may see some movement on that, about whether the SEC even wants an appeal anymore. We certainly saw in a different context, on a different matter, where I won't go into details, but where someone non-crypto went into a court and said, actually, I need to restudy this because I don't know if I still want to bring forward this case, right? Or this matter. I won't go into that, but I think you guys know what I'm talking about, involving the president-elect. And so, yeah, I think what we may need to be mindful of, and I think some of our colleagues, including Klayman, Siddiqui, Jenner, and others have said, is we need to be careful. The plaintiffs' lawyers, no matter what kind of a change the SEC may have in its enforcement attempts or enforcement stance, plaintiffs' lawyers may not be as strategic, in terms of trying to build out a body of law, and may nonetheless bring suits. I think also, to the extent that we have judges that may have already taken a particular view, like Judge Rakoff, for example, if cases come before Judge Rakoff, does the SEC's changed stance affect the judge's view? I think these are all interesting questions.
David, thank you, Josh. David, go ahead.
So I think it's a fascinating question, and I think there's and this is something I'm going to write about when we do our end of the year sort of 2025 predictions for the WSBA. But look, I think there are a few different outcomes. One is, if there is momentum on getting a market structure bill approved, that it certainly could be in the judiciary's place or the SEC's place to say, you know what, we're going to pause these proceedings and we want to see what Congress is going to bring forward to regulate this space and defer to Congress. They also could just choose not to bring these appeals forward. I don't think, in the Ripple case, for instance, I don't think the judge would compel the SEC to continue forward with their appeal if they chose that, you know, in light of circumstances, they're willing to accept the offer Ripple made and settle the case. I think my sense is, depending on who becomes chairman of the SEC, is that, you know, either in certain cases we'll see them settled with a fine, or I think we'll see them, you know, either paused or pulled, awaiting, you know, congressional action being taken on market structure and some of the other elements in the bills.
David, no matter who chairs the SEC or how the SEC operates going forward, am I hoping in vain to get a definition of sufficiently decentralized?
I think you have the chance of that upcoming as much of a chance of you winning this bet with me.
Just throwing that bet out there. David, Josh, thank you both so much. I want to rip up the script a little bit. Earlier this week, shout out to Michelle Gitlitz and Joe Sicolo. We had a wonderful webinar on specifically on payments law vis-a-vis crypto and kind of the state-by-state analysis. We'll be doing that on a quarterly basis across different states and really understanding the lay of the land. But Josh, David, it does bring to my mind the states conversation. When you look at, I'm thinking obviously Wyoming, I'm thinking Texas, I'm thinking, you know, Joe had noted a series of bills in California, at least from a payments perspective. Does a change in administration like this, and it wasn't just federal, David and Josh, we had the Senate races, we have most of the House races, we have some governorships, I believe there's some changes there as well. Emma Channing, thank you. Sufficiently decentralized is ridiculous. You're the best. But David, Josh, when you look at kind of the state conversation, does this open up states to be more innovative? Does this open up states in your mind to be able to approach crypto in a way more freely than they might have been able to before? Or am I overreading the results of the election? David can go first.
Oh, I was looking at Josh. I'm kind of thinking of it in a broader picture. I think that, you know, we will see stablecoin legislation put forward in the first term after President Trump comes back into office. I know there's been talk about maybe during this lame duck period, but I'm not really convinced that there's a willingness on both sides to push that forward, or at least what it would entail to be brought forward and other things that might need to be part of it. So I think that, look, I think it's important if states want to be able to accept it. I think that's important, and I think it's a good first step. I think ultimately we're going to need a stablecoin bill. And I want to add, like, I think we have this great opportunity for legislation in the next term, but there's still a lot of thorny issues like the industry has to work out on where we think, you know, what these bills should look like. And you know, there's a lot of, like the stablecoin bill, like, you know, some people think a national bank should be the only ones that can, you know, be stablecoin providers. And now I think a number of us feel like, you know, fintech companies and a broader group of companies should be able to create and you know, bring stablecoins into the marketplace. So I think we have some important issues as an industry to sort of solve and find middle ground on to get legislation to move forward.
Josh, David, thanks so much. Josh, you know, with the work you do with clients existing and coming in new, are the doors of innovation kind of blown open post-election in your mind?
Yeah, for sure.
Yes.
I mean, I think people are moving forward on projects where, like we've talked about, where it had been keying off of the election results. I mean, just to build on what David was saying about bills and things like that. I mean, certainly we've heard that, you know, during the lame duck session, Patrick McHenry and others were going to try and push forward to get FIT 21 or some other market structure bill passed, or the stablecoin.
Someone's working.
Yeah.
As soon as you mentioned
the federal stablecoin bill, where Maxine Waters had prior to the election said it's time to strike a grand bargain, right? But then we have, you know, Sherrod Brown, is that how he says, or Sherrod Brown, however you say that name? Yeah. where he, has credited or blamed the crypto industry for forcing him out of his prior seat,
Yep.
if you will. And so who knows whether he's going to be willing to strike a bargain on that.
Yeah.
I do think that, to David's point, maybe in the Trump administration, there could be a focus heavier in the next few months on things like taxes, trade, tariffs, stuff like that.
Yeah.
With, the start of the new year, perhaps bringing in legislation. We don't have a filibuster-proof Senate, even though there have been significant gains. But I think, in terms of what that may mean, well, that's for the federal government, but for the states, who knows?
Yeah.
I'm hopeful, though, that with this new administration, parties like Caitlin Long and Custodia Bank, who have been fighting the good fight for a long time about getting Fed Master account and things like that, that we'll see progress in that. Yeah.
Josh, thanks so much. Shout out to Adam Goldberg as we talk about policy. We're overdue for a policy update talking about Sherrod Brown and the Ohio loss. David, I want to pivot us back to some of the market action that we're seeing. And again, for everyone in the audience, thank you so much for being here. If you've got questions or comments for Josh or David or I, please put them in chat. We'd love to talk to you. David, Josh, you and I, the three of us text on a regular basis, driving Josh usually crazy around 8 o'clock at night on looking at the price. But David, what are the options market doing? I know you look at them on some regular basis.
So it's been really interesting. And, there's a couple of things to look at. One is there were a lot of options priced between 80,000 and 90,000 for the end of November.
Mm-hmm.
And so what makes that interesting is that if people are really positioned for that if we were to go past that, a lot of people would be out of position. And so that means that they either have to buy crypto or sell crypto to protect those positions. So I think this 88 to 90,000 range is there's a lot of resistance there. And so I think that's one thing to watch for. I think another thing that's really interesting is that when President Trump, I'm just going to call him President Trump because he's going to be president in 2 months. So,
Sure.
When soon to be President Trump Part 2 takes office, there's talk about no capital gains for American-based crypto companies.
Yeah.
And, suddenly, on my screen, when I looked after work, I saw Ripple was up 15% and Cardano had a big move. And a couple of other US-based crypto companies had, sizable moves. So, I think it's worth paying attention to the market and the trading and some of the tokens to see, where some of the sentiment is. And with the example of Ripple, there have been holders who've been holding for years, hoping for, price appreciation to back where it was before the lawsuit. So it'll be very interesting to see, sometimes the markets can be a proxy for where people think, the laws are going or these cases may be going. And so I think it's really worth seeing what happens there. And one other thing I wanted to mention is that, ETH, of all the tokens, really ETH has not moved much compared to Bitcoin, which is at an all-time high. Wow. ETH is around 3,000 and the all-time high was around, almost 5,000. It was 49 something. Yeah. I think it's really interesting to pay attention to Ethereum and see, how that trades in the coming months, end of the year. Because I think one would expect with an ETF in place that we should see somewhat significant inflows if people want exposure to crypto, to both Bitcoin and Ethereum. So I think it's going to be really interesting to see, how those trade and how those move in the upcoming months.
Josh, when you trade out of your whale wallet, again, to the extent you want to comment on market moves, what are your thoughts on some of the things that David said? I want to give you a little bit of airtime about it. Or you just buy and hold, and that's it.
I think David's crystal ball has been pretty spot on. So I'm waiting for the David and Ron fund.
And the wager comes back to haunt me yet one more time. Emma Channing, I just want to address the question. Who do you think should replace Gensler? That answer is David Brill. Would someone with commercial litigation experience make sense? Interesting question. Do you think that we will see the U.S. get back into DLT space race and come up with something like ECB's DLT trials? This brings us back to, or Monetary Authority of Singapore's Project Guardian. David, Josh, this brings us back to conversations the three of us have had in Washington and with colleagues, not as lobbyists, certainly, around things like safe harbors. Josh, will Commissioner Peirce's safe harbor recommendation come to fruition? And then we should get back to who should replace Gensler, but I feel there's a wager coming and I don't want to be part of it. Josh, why don't you start?
So, I mean, I do think, and I believe Commissioner Peirce sort of raised this in some comments a few days ago, the need for there to be some breathing room for projects. And we've seen the Safe Harbor 1, Safe Harbor 2 from Commissioner Peirce. I mean, we've also heard discussions about maybe bespoke, disclosure documents that actually, to the extent that something had to be disclosed or a filing had to be made, that it would actually be meaningful for crypto projects. I think to Emma's questions, one, just starting with the last part about the DLT space race, I mean, I think digital financial market infrastructure, these changes are coming. These are coming, and the projects that Emma mentioned, and rightfully so, they're huge, like very important initiatives where we see public-private sort of partnerships, at least in terms of proof of concepts and things like that. But I think, the tokenized traditional securities and really changing the rails, that's coming, holding aside crypto. So I do believe that we will get back into that. In terms of a new person for the SEC, I mean, we've seen names in the market. We've seen a number of commissioners, Hester Peirce, Mark Uyeda. We've seen a number of law partners, including Rich Farley, Norm Champ, who I guess also has been at the SEC at various times. We've seen, I won't go through the whole list, but there's a whole host. I don't know who it should be.
There was
David, Ron, what do you guys think?
Well, there was a rumor for a long time that it was Gallagher over at Robinhood, who was a former SEC commissioner, if I recall. David, weigh in. What happened to that possibility? I thought that was almost a lock in many people's opinions.
I mean, I'm not close to Dan personally, but I could certainly see him wanting to stay in this really interesting role at Robinhood that he has. And by the way, Robinhood is a perfect example of where our regulation went wrong in this process over the last 4 years. So no, I don't think we want someone with a commercial litigation background. I think we really want someone who really has a strong grasp of capital markets and really understands the implications of like what tokenized securities are and the implications of what does crypto look like in a regime where we have all these legacy tokens. How are they going to be treated? These are real thorny, sort of thoughtful questions. And I think better than a litigator, I think somebody who really understands markets and the history of markets and has real hardcore work experience in a bank or a real, solid financial institution would be really helpful there.
Which is exactly why I recommended David Brill, but I'm not sure. I'm not sure. Josh, go ahead.
I mean, to that point, I agree. I think the SEC's focus, I hope, will be reclaiming the focus, one of its mandates on capital formation, right? And I think someone business-minded. I mean, it could have been Gensler. That's the whole thing, right? Like, it could have been Gensler if it just weren't Gensler.
Could it
right? Like, if Gensler had behaved the way the industry had hoped he would have behaved, given his prior statements as a professor. I mean, I think somebody like David said, who knows the capital markets, who is going to be focused on contributing to capital formation, I think is.
Could it have been a Gensler as a non-Gensler? And when you look at his background, he's been a political operative for many years in Washington. I know what you're saying about the MIT courses, Josh. I can't imagine, given his work experience, that he'd be the innovative kind of SEC chair.
You're totally right. Actually, now that you say that, after we see the expansion at the CFTC, how he was able to expand their authority. Yeah, no, you're absolutely right.
Yep. And Emma Channing, good comment. Clayton had that big firm experience. He just landed at Southern District of New York, as I recall, or at least appointed to that position. But fair point. David, Josh, we've got to start wrapping it up. David, I'd love your thoughts on the coming weeks, certainly on price action. And as you have dreams of that 60-ounce tomahawk steak, medium rare at porterhouse. Is the side mashed potatoes or baked potato?
That's a good question. I'll have to ponder that, Ron. But I think there'll definitely be a shrimp cocktail to start. You have to
Oh,
have
God.
that before you sort of even get into the sides for a good steak. Look, I'll be looking at price action for one thing. I think where are we gonna land? Like this 90,000 resistance, this 88 to sort of 90,000 sort of channel.
Yeah.
Do we have a lot of action on the weekend? We've seen a lot of volatility on the weekend. I think we could wake up and crypto could be at 84, 85 for Bitcoin, or it could be at 94, 95. So I think really paying attention to that. I just came back from vacation, so my email box was full, like Josh. Companies who've been sort of waiting to see the results and are ready to start looking at projects more seriously. And I just want to take a 1 minute to give a shout out to my team at FTI.
Yep.
US FinTech awarded FTI Digital Assets in the blockchain group their FinTech Partner of the Year, and I'm really proud to be a part of that. And the awards were last night in New York, and I know the whole team is thrilled. So I just want to take a minute and congratulate everybody.
Congratulations to the team, FTI. We're privileged to have them as members of the WSBA. Josh, before we get to you and kind of wrapping it up, I do want to address Greg Murphy's comment. Greg, really good point. His or her role as chair is bigger than crypto. Absolutely agree.
Yeah.
And again, the comments I make about Chair Gensler are not necessarily personally negative, but you've seen that methodology or how he's approached markets across not just crypto, how he's approached private markets, how he's approached different verticals with proposals that really do limit, in many people's perspective, innovation in a way that's overall not helpful to the mandate of protecting investors in many regards. So I could be wrong. Greg, happy to have a deeper conversation about that. Josh, as the Bentley pulls up for the weekend for you, what will you be focusing on?
So one thing yesterday that was filed in I think the Eastern District of Kentucky was a suit by several Republican state attorneys general and the DeFi Education Fund. I think that's what it's called, right? Suing the SEC and the 5 commissioners and trying to, as I understand it, prevent the SEC from bringing additional enforcement actions against trading platforms. It also brings up, again, the major questions doctrine and things like that. I'm going to be reading through that because I've only skimmed, but I think that's something I'm interested in. I think, yeah, I'm also going to be just following the appointments. I mean, it's like a popcorn kind of eating thing.
So what about you, Ron, as you polish that fine boat of yours, as you get out on the yacht for a little Saturday cruise?
I will continue to watch the appointments and get my thoughts on some of what's happening there. We've got a bunch of publications coming out with the Wall Street Blockchain Alliance before now and the end of the year, so we're spending a lot of work on that. And on Monday, for everyone who's watching, we have a webinar for those of you who are interested on the accounting side of things, how to deal with the new broker regs. Apparently, a whole bunch of brokerage firms in the ecosystem of crypto are not prepared for what's happening on January 1st, 2025, and they need to be. So info at WSBA.co if you haven't seen it. We've also blasted it out publicly on LinkedIn. If you could join us, that's great. And then last but not least, David, besides picking out the nice Bordeaux for the steak dinner, I'm probably going to lose the weight or two, but maybe not. We are also planning the holiday party where WSBA members get together in New York City, probably in early December, to have great conversations. Looking forward to that. So we're working on that as well. David, Josh, always a privilege. We're going to leave it there. Emma and Greg and Adam, thank you all for the great conversation and the great questions. Have a great weekend, everyone. We will see you next week. Bye.
Take care, everybody.
Bye.